Can you believe we're halfway through February already? I mean, my goodness, but we got some really good stuff today, and I truly mean it. Like it's entertaining, not just like boring mortgage stuff. So here's what we have today. Rates coming down a touch, right? We're seeing the high sixes now. You can see how we made a little improvement the last few days on this chart. Remember, green is good. Higher means lower mortgage rates. You can see that we're now butting up against that 200-day moving average, that blue line. It may take a little bit more force to get above it, but I think we're going to be kind of stuck here in this high six, low seven range for the immediate future. But we got some good news coming. Side note, I saw this and I thought I'd share this. Since 1971, this is when we started keeping the data as an industry. The historical average in interest rate, the average interest rate since 1971, when they started tracking the data, is 7.73. We've all just been spoiled the last decade when rates have been in the fives, in the fours, and obviously during COVID, the fours and threes. So at this point, with rates being, let's call it that 7% number, we are below the average. And the air quotes good news, air quotes, is that I think this year is going to be very boring. Rates are projected to stay somewhere around that 6.5 to 7 range. I don't know that we're going to get a ton better. We might end the year a little better if you see some things happen, but the reality is I just don't expect a whole lot out of rates this year. So good or bad, at least consistency, I think just helps change the mindset of a lot of folks out there thinking about buying. The Fed, so there's two parts. So this slide is kind of negative where they're saying the Fed's a little concerned about the trade and the tariffs and all those things that could come in from the administration. If those that does happen, and if they stick for long term, it could be inflationary. We and the home market, the housing market, don't love it because a third of our lumber comes from Canada. So if you put a tariff on that, it can be very expensive to build a new home, and it already is expensive. On the other side of the Fed, about mid 2025, so they said mid this year, call it June, July, they said they're going to start becoming more neutral on their balance sheet. So all that means is that right now, when treasuries or mortgages, when they expire or they've matured or they go away, it's about 40 billion, believe it or not, 40 billion a month. I think 10 of that is mortgages, 30 of that's treasuries. Right now, those go away. They don't do anything. They just let it run off their balance sheet. So what they're saying is mid this year, they're going to say neutral, which means when 40 billion rolls off, they might go and actually repurchase a brand new 40 billion in the month. And that will start creating a demand for mortgages and a demand for treasuries, which in theory should, if all things equal, should bring rates down a little bit. So that'll be good. So we'll see what happens on that. This, I think, is where it gets interesting. I have heard, I've shared that with you guys about the first time home buyers. The median age is now 38 years old. That's up from 35. So I've been saying a big reason why the housing market's still going to stay strong. All the millennials, not all, but the lion's share, the big boat of them, the middle part of the bell curve is coming of age in the mid 30s, and that's the home buying age. So there's still a big demand, and it's going to come for the next 2 years, give or take 2 or 3 years. And the middle age, or the median age, pardon me, of the first-time homebuyer is 38 years old. The part that really surprised me is this next chart, and it's over here on the left. But the repeat homebuyer, I had no idea. The repeat homebuyer now is 61 years old. That is crazy to me. I don't know that I truly believe it. I'm assuming just based on what I saw, repeat just means you're buying a new home after your first one. That just seems like a really long time. I mean, that's 13 years living in a home. But then I think about it. When Caroline and I got married, we lived in that home for literally 13 years. So I was like, well, I guess that makes sense. Now, again, I wasn't 38 when I bought my first one, but the reality is that might be true. So this black one shows the middle one, and the one in the middle shows that it's 56 for the all home buyers. It's kind of that median age. So I just thought this is really interesting. If you don't, maybe you're not a nerd for graphs like I am, but there you go. Zillow's heat map. So red in this case means like super hot market. You can see, let me check out, I'm assuming the DC area, well, I guess that's not DC technically, but look at the Jersey, Massachusetts, the Southern New York. That's really, really hot. Like apparently that's like super big time seller's market. I like and see in this graph that Texas is a nice shade of purple. That is right in the middle. So I'm good with that because again, we don't want our sellers, we don't want a seller's market. We don't want a buyer's market. I want a good market where both buyers and sellers win. Everybody's excited to go buy and sell. I'm a big fan of that. I'm glad we're not the West Coast where it gets really blue and some, I guess, what is that? What is that down there next to it? Doesn't matter. So the point is, play with the graph, look at it all you want. Redfin and Zillow, they've announced a partnership. So good for them to some degree. They're having some layoffs, is what it is. Realtor.com, just to pick on those three companies at once. Realtors.com is coming to Texas. So migrating away from California. So that's good for us. It's going to Austin, Texas. And then for the fun stuff, here's where you can retire with $1 million. And for how long? For example, Texas, somebody's got $1 million and Social Security. It shows that you can supposedly have a normal lifestyle, whatever that means for everybody, for 47 years in the great state of Texas. California, you only got 16 years to have $1 million in your Social Security last year. The longest state that I can see off the top of my head, well, is West Virginia. They pointed out 89 years. So if you got $1 million right now and you get Social Security, move to West Virginia. You're pretty much going to be A-okay, is the joke. And Mississippi too. I was like, daggum, that's crazy. And along those lines, I don't know this lady, and I've actually read a book and I've done some, light digging on the Great Depression, all that stuff, and the stock market collapse, and Black Friday, all that stuff. And Hetty Green was nowhere to be mentioned. It also is because apparently she died in 1907 before all that happened. But I had no idea. She was apparently the richest woman in the world, and she's bailed out Wall Street and New York City, not once, but twice. So back then in 1907, she lent them $1 million, one time, and then apparently $4.5 million. So $150 million in today's money is what she's done for New York. So I didn't know her. So a little shout out to this witch of Wall Street. She was very shrewd and labeled as a miser, but apparently she was still very fair. So while a miser, she didn't gouge anybody even when she had the opportunity, which brings us to the pinching a penny. So what you may not know, because I didn't know this, apparently we are no longer, according to President Trump, he's ordered the U.S. Treasury to no longer produce new pennies. And you're thinking, my goodness, why? Apparently it costs 3 cents to make 1 cent. So love Trump or hate Trump, you at least got to be like, yeah, that kind of makes sense. Let's not spend 3 cents of our, national, budget to make a penny. So there you go. The worry here supposedly is that maybe inflation ticks up because now people are going to round to the nearest 5 cent. I don't know. Maybe I'm wrong, but I don't think it's going to be that big of a deal. In Texas, this was more West Texas, more like, I think it was like Midland when I read it. Let's see. Yeah, Midland, Texas. There you go. For $300,000, you can get a house that's underground. I was surprised at how nice it looks. Conversely, you can go to Smoke Tree Ranch out in Palm Springs, and apparently you won't even know the people live there. It's apparently one of the most private, secluded communities where they don't even have like paved roads. It's dirt roads. You're not allowed to do a lot of landscaping. It's supposed to be very minimal. If you don't know it, it's probably because you're not rich enough to be in there. So I didn't know it. And there you go. That's my share for the day. And the mortgage meme, I got to admit, for half a second, I was like, wait, I don't get it. Point of view, 4 days before closing and your loan just got final approval. So somebody's going to go buy a car. That's the joke. I was like, oh, that's true. They do that. So I didn't get it for half a second. Will Ferrell just threw me off. But there you go. That's a good meme. You know what to do. Share, subscribe, forward, all the fun stuff. You've been here, done that before. As always, appreciate you. Love to hear some comments, thoughts. Let me know what I can do to help you, if anything, and have a great remainder of your week.